Markets generally had a positive day, although trading volumes were somewhat thin. This on the back of key markets that we reflect, that is China and Hong Kong, being closed for the week. That is to celebrate the National Day holiday, to celebrate 70 years of communist rule in China. In Japan, the government moved to raise the sales tax in that country by 2 percentage points. Despite concerns that that could crimp economic growth going forward, the market closed in positive territory. The Nikkei share average rose 0.6%. And as mentioned, Hong Kong and China are out of action for a week. Over in the United States, US stocks rose on Monday, helped by gains in Apple, Microsoft and Merck & Company, as investors set aside worries about the US-China trade war. The Dow Jones Industrial Average rose 0.36%, the S&P 500 gained 0.5%, and the Nasdaq Composite Index added 0.75%. Well, global markets appear to be steady as you go, with more of a downward bias. The key driver appears to be how the US-China trade talks go. A stronger dollar has given way to rand weakness, while the gold price has hit a 2-month low, now trading around $1,467 an ounce. And in local economic news, we've learned that the ABSA PMI fell substantially in September to 41.6 index points, signaling that the manufacturing sector, which is significant in our economy, remains under pressure. Well, let's take a look at the indicators. Well, to break down what's happening on the markets for us, I'm joined at our JSC studios by Shaun Murison. He's from IG South Africa. Thanks very much for joining us, Shaun. So just give us a sense of what's driving global markets today. They do seem to be rather subdued. So your interpretation?
Yeah, Nompu, thanks for having me. There's definitely a bit less liquidity in the market at the moment. We know we've got some of those Asian markets that are closed, but I think the macro themes in the marketplace remain the same at this point in time. We've got geopolitical tensions with that recent attack on Saudi Arabia oil facilities. The overriding theme is the trade war narrative, which we're leading in towards the renewal of talks now in the upcoming days. That's after talks stagnated in May this year. Then the theme of global growth and monetary easing.
So today appears to be a day of dollar strength. That tends to happen when there's some risk aversion. People decide to plow into dollar-denominated assets and the like, even if the problems are emanating from the United States, interestingly enough. So that's led to some weakness in the rand. Are we seeing that generally in emerging market currencies?
Yeah, I think emerging market currencies as a whole have been weaker. The dollar has been strong, so problems or conflict has emanated from the US, but the US is looking the healthier of the economies at the moment. GDP growth is looking pretty solid. The labor market's looking pretty good. It's still trying to temper inflation, and that I think perhaps that dollar's been undervalued, and now it's starting to renew gains. While the US is on the course of monetary easing at the moment, you've got other global central banks easing further. Like the ECB recently announced their rather large stimulus package and that. So there has been some return to the dollar, and I think the rand will still be tempering some of the upcoming news items and events that are coming, like the midterm budget speech, and then following that a ratings review by the Moody's Investor Relations. So it would keep that mindful of those things, but most of the movement is from factors external rather than that which is domestic right now.
Yes, and of course we've seen the precious metal gold being whacked as a result as a result of what, actually? Because usually when we see some risk aversion, that tends to be positive for the gold price, but we're seeing that not doing terribly well today. Why so?
Yeah, well, we always have to, us market commentators always have to find the reason. But generally there's an inverse correlation between gold and the US dollar. And while we're seeing this, this dollar strength at the moment, that's translating into a weaker yen, another safe haven, and a weaker dollar price at the moment. But I think, we at the moment we're sitting at a pause phase. The gold price has had a good run. It's now started to retrace a little bit. And, we've got a lot of events and themes that are being carrying on shortly. But we're at that pause phase, that we're waiting for the trade negotiations to carry on for further market direction.
Without those trade negotiations, one wonders what else would be driving the markets, if anything. But you touched on the yen. Let's talk about Japan a little bit. They decided to raise their consumer or sales tax by 2 percentage points today. When they did that a number of years ago, that had the effect of actually reducing economic growth in their economy. So why do you think there's a lack of pragmatism on their part and they're deciding to go down this route again?
Maybe it's because they've got a lot of visitors in their country right now for the Rugby World Cup. I'm not sure. But yes, you're quite right. Previously, they raised that tax that sales tax from 5% to 8%. What happened in that regard is that you had this surge before the implementation in consumer spending, and then this lull, this economic downturn, which followed that. I don't think that this decision has been taken lightly by the Japanese government. They need to raise welfare taxes. They've got more people on social welfare, an aging population, a declining birth rate. And I think they've been a little bit more tempered. They've delayed this decision twice over the last 4 years before implementation. And I think they've got some measures in place in terms of cash reserves, not raising the taxes on certain food items and that, hopefully to better manage this increase in sales this time around. But they do need to raise further revenue to help support their economy.
It does seem unfortunate that our markets tend to be moved by what happens outside the country rather than inside the country. Whenever you hear of a key piece of data coming out in other places, it does have an impact. But to what extent has the PMI data had an impact? Our local PMI reading coming out very low at 41.6 points. It's apparently a 10-year low. What impact, if any, has it had on the market, or at least the perception of the South African economy?
So in the short term, I don't think there's been too much of a reaction in terms of it's not seen as a very high. It is a a leading economic indicator. What is unfortunate is that it is not just a reflection on the local economy. It is also a reflection on a slowing global economy and South Africa's relationship with those, especially like European trade partners. Growth, across the world is pretty sublime at this point in time. That reading sitting at 40 odd, whatever it is, I think the key figure is here is that when you see a figure that's below 50, it alludes to industry contraction. Manufacturing is quite a big industry in South Africa. It accounts for something like 14% of GDP. So it's not a good picture for certainly a local economy. But it's also, but I don't think it's just us to blame. I think it's a reflection on that broader picture and that global economy as well.
One last thing before I let you go. What is your expectation for the fourth quarter? Well, on the first day of the fourth quarter, which is basically the balance of the remaining year, do you expect the markets to be positive, or can we expect more volatility?
I think the same themes that we've been talking about are going to continue to dictate market movements at this point. We become much more bullish on markets if we do find some progress relating to the ongoing trade narrative. But if you look at the sort of recent cycles, relating there, it's just, we are expecting a choppy ride, a lot of volatility. If history predicts, future, then these talks have a very strong possibility of breaking down. And that's so it's really about, what is the expectation of monetary easing around policies, and a lot of that monetary easing is to support what is happening with the actual trade narrative and its impact on growth.
Shaun, thank you very much for your time and insights, sir. That was Shaun Murison. He's from IG. After the break, we're going to be speaking to ABSA senior economist Mialani Maluleka